There is one stock that is about to skyrocket. This company recently added a senior executive in the AI. I think he's like a VP of product, or was at Meta. They added that individual to their board. So Meta, of course, very good at attracting AI talent, not necessarily the best at keeping it. This company, Lemonade, LMND, uses AI to make insurance underwriting decisions to say if this individual is qualified for this insurance policy. And they are unprofitable, but they raised their guidance on November 5th. And the stock's at a really important level post earnings that presents a favorable buying opportunity. So let's jump into the opportunity. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is Lemonade. This is that VP of engineering for AI products. You know, that's a pretty significant add to their board, considering they are basically a startup. And yeah, they obviously have connections with insurance companies. They're a heavy direct marketing company, which is why, you know, it's a little concerning that they're unprofitable. But you know what? They could figure it out. They could turn the tables, turn the corner in terms of getting a little extra margin from the insurance partners side. I'm sure that's what the VP of AI engineering is working on, you know, how to make better underwriting decisions so they can get a better price from the insurance giants, Geico, Progressive, etc., if they're able to actually provide better leads. So even if they're not as good at making, you know, they have to be very careful with compliance too for their advertising because they're a huge company. And the guidance raise is also a super super green light. So we'll see. This is not a crazy sale, but it is right bordering on a level that's notable, definitely, for an executive, around the $70 level for that sale. And then as far as what this company is up to otherwise, 30% year-over-year growth in premiums written. I believe that's what that means, in-force premiums. Gross profit up 100% year-over-year. And customer count is up 25%. So that gross profit is not notably meaning that they're a profitable company, but it does mean that they're moving in the right direction. So this is the company. They do offer insurance in Germany and the Netherlands and France as well. So they can do their ad buying in these other countries, which do have lower ad rates, although they're still very mature markets, Germany being the biggest one in the in Europe. So again, the AI angle is definitely interesting, but it would be great if the losses could narrow so much that they actually make money. So we'll see what happens. Fortunately for us, we don't have to be betting on this company's next year. We really just have to bet on the next month or so. And it's not really a time-based investment. It's more of a specific level-based investment. And can see that super clearly here. Here is the close. Significant buying activity, accumulation right after the earnings were announced. Earnings were, you know, the guidance was solid, so people want to own the stock. And sure, there was some profit taking, sell the news, but it's getting up over that $78 level. And people definitely want to own this, despite the failed breakout today. Again, I've mentioned this, but today was a red day, so Of course, Bitcoin and Ethereum looking terrible. Money is definitely in these earnings reaction stocks right now. So Lemonade being sort of at the head of that snake in terms of recent earnings reactions. It looks really similar to Twilio. Little profit taking and then some support. So definitely want to watch this level. And when we compare it to other opportunities, I mean, there are some other opportunities, but they're slow. I mean, Caterpillar, same thing. Earnings reaction, little pullback, holding, but it moves 3% a day, right? So it's interesting, but Lemonade moving 10% a day, of course, that being helped with this big move. You got to put your money somewhere where it actually moves. Otherwise, you're going to grow old before it does anything at all. The stock could, called Caterpillar, could go sideways. I mean, it probably won't. It's had a huge run, but it's not the fastest mover. It's silly because Ford is also a great opportunity right now, and as I've mentioned, but these stocks do move really slowly. So it's almost a little hypocritical to be talking about how these are good ideas and at the same time saying that stocks that have had huge moves up like Goldman Sachs were not good ideas, when in fact 5% plus 6% in a few days at a really smooth move. I mean, that's pretty interesting. So you do have to get a little creative in times like this when a lot of the speculation names are pretty just beaten down. Kohl's is definitely interesting as well. Some of these retail names are interesting, but you got to balance how slow they move combined with, how safe they are and how attractive sort of the flags they're building out are. So this is the idea. Lemonade, there's a lot of stocks to pick from here on this list that could be good ideas, but some of them, frankly, have already gone up. Gold being one of them. Now it's in no man's land. So let me know if you like this idea. Hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help and you want to see how a couple of our superstars have performed, head over to stockscommunity.com. $25. What is that? A couple pizzas? Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.